good morning. You're watching The Market right here in 18 with me, Aisha Faridi, Nikunj, Dalmia, Avan Dabash in the studios. And just a day ahead of the interim budget, look how weak we're actually looking. I mean, of course, yesterday turned out to be quite an earnings reaction day. You had quite a few heavyweights led by, of course, Bajaj Finance, which on closing count was down a good 5.5%. So we are facing resistance around the 21,800 mark because day before was a big move day led by Reliance Industries, and we've managed to close sub our 20 DMA as well. And Reliance, after that day before's move, yesterday managed to drag the Nifty lower by about 60 points. That's how massive its contribution was after contributing to a 100-point move just the day before that. Having said that, the broader markets continue in ship shape. You've got the Nifty small cap, which made a fresh record high for itself yesterday, and FIIs are back to selling.
It was a good Monday, but there was no follow-up buying. And absolutely, if I look at the data on Tuesday, markets gave 50% of what they gained on Monday, which means that there is just no follow-up buying, and FIs, they continue to sell. While on the upside, there is a resistance, at lower side, there is a support, which means that if you really look at the market from the prism of Nifty, market continues to navigate in terms of, up and down in terms of where the price action is moving. Are we in for a decisive move? Now, yes, the budget could give you a near-term breakout or a breakdown. That is entirely conceivable, and that is a function of really technicals, not so much so of the budget impact. So here's the graphic, very simple graphic. Let's look at last 3 years budget. And we are looking at 2009, 2014 and 2019. 1 week before the budget, the market move has been anywhere between 2.5% to about 1%. And 1 week after the budget, the move has anywhere between -4% to about 0.5%. Now, 10 years ago, budget really mattered to the market. But over the years, the importance of budget has got diluted. And considering that this is vote on account, from a market standpoint, this budget may just be a short-term 500, not even 500, I would say a 2.5% kind of a swing event for the Nifty this way or that way. Now, are we likely to get it today, or are we likely to get it after the budget? That's anyone's guess. But my sense is that this time markets are not just, traders are not trading with one eye on the budget. Traders are trading with one eye on crude and the other eye on FI flows. So frankly, budget is crucial, budget is important, but from a market standpoint, it's not going to move the needle. Let me just give you a breakout or a breakdown. And I think by Friday or at max by Monday or Tuesday, budget would be forgotten. Okay. Impact would be forgotten.
Yeah, perhaps. So it's not really going to be on top of mind for far too long. That's going to be the impact of budget and the markets. And we've got some interesting data really that the team has culled out, talking a little bit about how the markets and even other parameters have moved since the last budget. For instance, the currency has depreciated about 1.7% against the US dollar. This is since last year's budget. Some of the top sectors that have seen a leg up include the PSUs, of course. They have been at the forefront. Real estate, even energy as a basket, and all major sectoral indices have had a pretty strong run. FIIs, though, have been net sellers since the last budget, close to 10,000 odd crore rupees, 10,700. And Nikunj, it's been the DIIs that have really bolstered the market with a 1.7 lakh crore buy net figure. Markets have gained about 23%, and it's the small cap end of the market that has clearly outperformed since last budget with a gain of about 66%.
So, budget again will occupy the mind space today, tomorrow, and hopefully till Friday. But the price action which we spoke about, let's say the price action mid cap, small cap, DI buying, FI selling, they are not just moving because of this big event per se. I guess from a market standpoint, the budget, like I said, could at max be a 2% swing event. Since we are at that juncture right now, the month of Jan has not been an exceptionally strong month, so to speak. FIs have been selling. So it really could be giving you that next swing move, whether we go below the resistance on the Nifty or we go above the support. I think for me, budget really directionally could do that. Expectations are so low. Wherever surprises would come, those stocks surely will see some re-rating. And we'll talk about it as it goes on. So yes, budget important, crucial, but not a market moving event. At max, you may just see a swing move on the Nifty here or there, and I think by Friday or Monday at max, markets would move on.
Yeah, absolutely. But what is not going to move on is the earnings jolt that we've been getting off late. And yesterday was dragged by Bajaj Finance. Today, of course, you'll have L&T as well as Dr. Reddy's too, which the street is going to absorb.
Yeah, so Dr. Reddy numbers are not bad. It's only you can argue about valuations. I mean, for the fact that the specific yes, Remimed is kicking in for them. I think that is something which is going to be giving earnings booster at least for next quarter. Now, brokerages are split right in the middle in terms of how do you value a business like Dr. Reddy, because the stock has seen a run up. So bear that in mind when you're looking at Dr. Reddy. Strong earnings, visibility. But in the near term, the stock is expensive and brokerage is not really gung-ho. There are hardly any EPS upgrades which have come out. L&T is where in the near term you would say that, look, the earnings were not as per what everybody was expecting and anticipating. So you may see a little bit of scuttle here or there. But frankly, if L&T falls, like I said, that Bajaj Finance, if it fell, you should have bought yesterday. Similarly with L&T, if it goes down today, which it may, because numbers in the short term do not excite that adrenaline rush, you should actually be a buyer, because based on FY25 and FY26 estimates, the way things are moving, the way capex is moving, how things are moving on their global front also, I think L&T has scope to outperform, and it should be a part of everyone's large cap portfolio. We spend a lot of time discussing IT, we've spent a lot of time discussing fintech, we've spent a lot of time discussing banks, we discuss defense, we discuss railways, but how much do we discuss L&T? Just think about it. It's not part of the narrative. It's such a constant wealth creator.
Yeah.
But near term, yeah, I mean, markets, you may see some adjustment here because numbers are not that great. But if it falls for 5-7%, I think it'll warrant a buy in my book.
I don't think it should fall that much, considering while the previous quarter numbers were below estimates, but the guidance has been quite strong. So, net, you're looking at a positive move perhaps for L&T, because the management has been very categorical in saying that they're pretty confident of achieving that 20% order inflow. Remember, the earlier guided figure was 10 to 12% kind of range. So that's significantly higher an order inflow guidance that the management has set in at a good solid 20%. And they said categorically that they're going to be outperforming the revenue guidance as well in high teens from 12 to 15% earlier. Now, it's debatable whether the market has already priced all of this positivity in or not, because L&T has chugged along quite nicely from the last year up until now. But let's see which way the stock heads. In fact, here's a quick slice of the management sound bites as well, post their numbers from both Dr. Reddy's as well as L&T.
Yes, so our growth is also attributed to the fact that we acquired a brand name Sidmus, and is actually working really well as per the plan. The price erosion impacted that growth, and also at the same period of time last year, we had certain divestitures. So actually, if you take these two out, we are in double digit already. We are aiming for double digits. And from the next quarter or the quarter after, we should see it in full swing, primarily behind certain brands that we believe that there is a tailwind and there is an opportunity to grow.
The legacy projects, meaning the projects that we committed in 2021, etc., are now beginning to come to an end. And as forecasted last time, I said that H1 would be possibly the lowest point in margin. Thereafter, the recovery curve will start. The curve has started. We still have some distance to go. I expect Q4 to be better than Q3, and the subsequent quarters of the following year to be better than these. So as the new projects kick in and start contributing to margin and the old projects disappear, in the course of 24-25, you will see the margin profile reflecting the margin embedded in the current set of orders. So I guess over the next 2, 3, 4 quarters, you will find the margin trajectory improving. By what order of magnitude will it improve? Does it improve by this 20 basis points?
All right, so we'll be watching out closely for L&T and Dr. Reddy's result reactions. But let's get a move on then and discuss the markets. We've got Kunal Bothra as well as Naresh Mirani joining in to discuss the setup and just talking a little bit about how we closed below the 20 DMA, and it was Reliance Industries, your star, that was one of the biggest culprits. What do you make, Kunal, of the dichotomy that we saw between the frontline indices versus the broader end of the market, the small cap index at record highs?
Yeah, I think one thing is absolutely certain, Avan, that the markets are still trading into a range or a broad band for itself. So, I think from mid of December, when we had managed to break past about 21,200 mark, towards the point when the index had broken past about 22,000 plus level. So, this is a 900, 800 point range where the index has been fluctuating. 21,200 has been tested twice. One was in the fag in the month of December, and the second was the retest just about 3-4 trading sessions back for the Nifty. And on the upside, we've retested 22,100 mark broadly for the index in the last 1 month as well. So, which means that the midpoint of this band could probably be a more of a litmus test zone where the index is trading with a slight bullish bias into a range or with a slight negative bias, and that comes to 21,700, 750 mark. So, we tried to break past about 21,700, 750 mark yesterday as well as day before, but we've managed to, we failed to sustain about those levels. Now, interestingly, one of the critical signs which, at least on the F&O data which is observed, is the sharp drop in the open interest for the Nifty, futures, because over the last 3 to 4 weeks, we've seen an average OI of around 2.8 lakhs, 3 lakh contracts on the Nifty futures. That has now come down to 2.4, which means that the markets are expecting or going into the budget event with slight degree of expectation that the markets could be volatile rather than a lot more sideways. So, expecting that this range bound as well as volatility would continue, but broadly 21,200 as a support, 22,100 as a resistance.
Naresh, hi, morning. Yesterday, I guess it was a big reversal in Reliance from what it did day before, and Bajaj Finance that I guess broke the Nifty back. Where do you see these two stocks headed next?
So structurally, Reliance Industries has given a breakout. So it made a 7-8% single day move, and pulling back 3-4% also would be normal after such a move. So this fade off which is happening in Reliance is actually where you want to initiate fresh longs. And the stock has broken out levels which were made for almost the last 1 year. Also, the fact that that's the only large heavyweight which is taking leadership. Now, at the other end of it, Bajaj Finance, we are seeing a breakdown in the short term, although the selling is not as strong as it should be after such a breakdown. Same is the case with a lot of financials. You have HDFC Bank, Kotak Bank, which is not taking any leadership. So that keeps us in a tight range on the index as well. So I would continue to remain bullish on Reliance Industries. And only once we start seeing leadership coming from the banking space, say if a ICICI or a SBI takes lead, it makes a case for the index to start breaking that 21,800 mark. Till that point of time, we stay in this range of 21,200 to 21,800.
Okay, let's talk individual stocks then. Kunal, what's on your list?
So, I'll go with one buy and one sell. The first was one Godrej Consumers. The stock yesterday was on the verge of a cup and handle breakout above 1170, 1172 odd mark. So, would suggest a buy with a target of 1215, stop loss at 1140. Trend was one of the stocks which yesterday fell very sharply, expecting this to be a strong follow-through move on the downside. So, suggesting a sell with a target of 2,900, stop loss at 3,200.
Okay, there you have it. Some interesting recommendations that Kunal's flagging off. Naresh, what about you?
So first is a buy on Dr. Reddy's. The stock has come close to that breakout point of 6,000 a few times in the last few sessions. Preemptive buy here today, post the numbers, if it sustains above those 59.50 mark, that would be a clean breakout. So once that happens, we could be looking at a target price of 6,400 in the short term. And we've seen the rest of the pharma pack do well. This is one of the names, the larger names, which is very close to a breakout. So stop loss at 57.50. Second is a buy on Container Corporation. A longer term breakout took place about 800, 820. After the initial move, the stock did a retest and it has made a strong base around 820 levels. So a good risk reward trade here with a stop loss at 840, target price of 1,000.
Now throw focus on some of the newsmakers and what's going to be in focus this morning. Well, sure enough, we're going to be reacting to ITC, DRL, L&T, I beg your pardon, but lots of other earnings as well. And Anisha is here to flag off some of those. Anisha, PB Fintech, walk us through the numbers and how the brokerage reaction has been.
Well, it was a very strong quarter for PB Fintech, the first ever quarterly profit that the company has reported of almost 40 crores. So that will go down well with the street. And it was an overall robust performance across the board in terms of the operational performance, because there was a large EBITDA beat which was driven by the decline in the ESOP cost. Yes, there is a bit of a decline in the insurance take rate and Pesa Bazaar revenue, but a lot of brokerages on the street were penciling in a loss for full year. However, the company has gone ahead and reported a profit of almost 4 to 5 crores on a 9-month basis. So that changes estimates for quite a few players. In fact, even if you look at the internals of the company, the premium, core premium lifted by almost 35% on a year-on-year basis. New initiatives is something that has done very well for the company, not only on the top line basis, but on the profitability front as well. These new businesses is something which is really supporting company's performance. However, the valuations now have become a bit more punchier, and that's the reason Nuvama has gone ahead and downgraded the stock to a reduce, saying that the valuations are rich, even though they've increased the target price to 790, while you have Macquarie, who's reiterating the underperform rating on the stock, and they have a target price which is close to around 610 rupees. But overall, I think the numbers were very strong, and that profitability number is something that the street will really like.
Anisha, they've reached a profit at least 2 quarters ahead of what, in a sense, everybody was anticipating, and they managed to beat their own guidance. Now, that's what markets like. That look, the path to profitability, what they carved out, they're reaching it faster. And if they're reaching it faster, it could be a function of cost cut, new launches, or growth in the business. The growth in the business is at that base, they're enjoying a certain amount of monopoly and certain amount of advantage. Cost cutting, I think, has been great, and like you said, the ESOP charges actually have been taken care of, but it's not at 500. A year ago, PB Fintech was available at 500. Now it's at 900. At 900, markets knew that they were reaching towards this path of profitability. The surprise factor is that they've reached the path of profitability much faster than what anybody anticipated. So what will happen is that the price targets now would be pulled forward, which means whatever your price targets for terminal values for FY27 were, they actually would be now end for FY27. So based on these numbers, I think there is case for PB Fintech now to start moving into long-term portfolio stocks, because they've demonstrated turnaround. In the near term, the stock is up 125% from last 1 year. And you know that there's an anchor supply, and there is a supply which comes from the ESOP owners regularly. So once the demand supply settles down for PB Fintech, I guess it has still scope to outperform. My limited point is that it has been a massive outperformer, and looking at these numbers, you can say that the outperformance is really here to stay, because that's what you have to judge now, that easy money is being made. Now, will it outperform the Nifty or will it underperform the Nifty? On that yardstick, I think it will outperform the Nifty. Like, I'm very clear, Paytm will underperform the Nifty. Zomato will outperform the Nifty. PB Fintech, I think, will outperform the Nifty.
Okay, and going by that kind of quarterly number, perhaps that is on track. Moving right on then, we'll also be watching out tomorrow for the auto sales, and by and large, we're expecting an uptick and a recovery due to the low base, in particular for passenger vehicles.
Auto sector entirely is in focus. Of course, today we'll get numbers from Maruti as well. Yesterday, that was a big event when Tata Motors took over the market capitalization as well, from 2016 levels thereabout, was sitting at record high level. And all of this, just ahead of the budget and the auto sales, which are lined up on February 1st, there is a sequential uptick which the street is penciling in, because December is seasonally a weak quarter. So in the month of January, there is better things expected. And this will also be on account of the low base that we have seen. There will be restocking that happens at the start of the year, so that is also something that will impact the numbers. Apart from that, if you look at the passenger vehicles, there will be a bit of a sequential recovery. Two-wheeler is expected to pick up pace. Post the festive season, we have seen decent amount of momentum, and that's likely to continue. For the CV, there was a bit of a dip over the last couple of months, so the street was worried. So the street will keenly, watch out for the CV numbers as well. Individually, of course, there might be a bit of a, uptick for Maruti Suzuki on a month-on-month basis by a growth of almost 25%. So watch out for that outlier. M&M on a low basis expected to jump up 24% on a quarter-on-quarter, on a month-on-month basis. I beg your pardon. And Escorts too, because last time was a bit dismal. But I'm not sure, Nikunj, how should one approach the auto space as an investor right now?
Nisha, I think I would be looking at tractors and two-wheelers. Passenger is going to be in a good shape. I mean, I don't think there is a challenge when it comes to passenger sales. I think the challenge here really would be what happens to the tractor sales, and now essentially two-wheeler space is making a comeback. The stocks have seen a run-up. And I don't think based on auto numbers, markets really, the stocks are likely to move any kind of, big, you're not going to see a big move based on that. But for me, I think these numbers would also indicate that has a structural slowdown started in the tractor business. Because the data point, what we've gone from, let's say, IndusInd Bank or some of the banks, they are talking about the CV and the commercial vehicle business actually slowing down. If that slows down, then tractors, CV, for me, that really could be the big component which would tell you that how things are moving for that category per se. Passenger car, there is no problem. Two-wheeler, bit of a comeback has happened, but with hero numbers would be crucial, given that the stock, given that they are the representation of what is happening to rural market. But again, I'll say it, for me, the tractor numbers would be of immense importance.
All right, that's what we'll be closely watching out for amongst the entire auto basket. Thanks, Anisha, for joining in with those details. Tell you what, it's time for a very quick break. We get you lots more market talk when we return. Stay with us. Good to have you back with us. Let's put the spotlight on numbers. And it's been a muted quarter for Voltas as the company missed street estimates for 11 consecutive quarters. Let's find out what's ailing Voltas. We've got Samit here with the number crunching. Samit?
Well, if you see for Voltas, as you mentioned, it was the 11th consecutive quarter where the company's net profit has been much lower than what the street was expecting. Now, similar to previous quarter, even in this quarter, it was the EMP segment which led to the overall miss for Voltas in the third quarter of FY24. Now, a few projects of the companies, especially in the Middle East, have been experiencing collection delays, and hence the company had to provide for those items, which led to this exceptional losses coming in for Voltas in the third quarter. Now, the management also believes that these kind of provisionings could continue for at least another 2 quarters going forward. So keep an eye out for that. Apart from that, the AC segment of the company, now there the performance was pretty strong. Though the revenue growth of the company was lower than that of Blue Star, but it was much ahead of that of Havells. In fact, the margin expansion was the highest among its peers, that is compared to Lloyd and Blue Star. If you see Voltas's EBIT margin expansion was close to around 97 basis points. Also, if you see the 4-year CAGR growth of Voltas has been much better than peers at around 25% CAGR growth. And but given the fact that in the third quarter the growth was a bit smaller, a bit lower compared to what Blue Star growth was, we have seen some market share pressure coming in for Voltas in the third quarter. The market share has declined from around 19% from 19.2% to 19%, and in previous year this market share number was close to 22.5%. So a big drop of around 300 basis points compared to what the market share was in the last year for Voltas.
Okay, that's Voltas, which is going to be in focus. Samit, thanks for that. But SRF as well reported its numbers, and it's a sharp miss on all fronts. Lisa, what's the reason for that?
Yes, so largely subdued numbers were reported by SRF, and talking about the margin, it was the margin decline reported by the chemical as well as the PFB business. Now, how big is the miss? Well, the absolute EBITDA saw a miss of around 10%, while the PAT, it saw a miss of around 25%, more than 25% compared to the consensus estimates. Now, it was estimated that the margin will come at around 20.5%, but the margin that came at around 18.5%. And this is not the first quarter that SRF has missed estimates. In fact, it's been since the last 5 quarters that SRF has been missing estimates, and it's mainly because of the chemical business that's been a drag. If I look at the chemical business margin in Q1 FY23, it stood at 30.2%, but now it has contracted and deteriorated to around 23.1%. And mainly it's on the back of inventory issue as well as low demand. But the management, they are quite positive on the outlook going forward, because they say that they see things changing for the chemical business going forward from Q4. And also they see that the large number of plants which are coming on stream, the focus will be on scaling up these plants as quickly as possible. So though the numbers were subdued for SRF, the management is quite positive about the outlook going forward for SRF.
Okay, thanks very much. That's the earnings roundup. Samit and Lisa, thanks for giving us those details. Sanjiv, Bhasin as well joining in right now on the show. And Sanjiv, what do you make of yesterday's market action? Pre-budget jitters perhaps that the market witnessed. The star of yesterday was clearly the broader end of the market that saw us, the small cap index hitting a record high.
Yeah, good morning, Avan. Well, that's been the trend. You know, people are missing the woods for the trees. And there is extreme buoyancy and bullishness on the mid caps, and that's where money is being made. Now you can say that there is a bit of fraud, But if you've been talking about that for the last 4 months, then you missed the rally. By the way, I gave you 2 days back an SME stock, Electroforce, gave you the reason behind that. In 2 days from 117, it hit the target of 115, it hit 148, by the way. I think, Awan, the standout here today will be PB Fintech. I've been advocating PB Fintech and Paytm for a long time, and PB Fintech has been my conviction buy after I met the management. Now look at the numbers. EBITDA positive for the first time, and that also with a huge margin jump. Now this company can talk of even jumping up to 2,500 crore in the next 5 years. So if you are looking for putting your money into some of the fintechs, PB Fintech is one outperformer. I think the broader market will continue to be on a outperformance levels, given that PSU banks, PSU's ownership, real estate are going through the roof. Now that may not continue. Once we go through the budget, there will be some flattening. But I can find value in a lot of stocks, particularly some large caps, some mid caps, which I can suggest where I think there is a lot of value and where you should be actually putting your money.
Okay, fair enough. And what do you make of the data point, Sanjiv? The fact that after 7 years, Tata Motors has pipped Maruti Suzuki to become the most valuable auto company. This is, of course, using Tata Motors and Tata Motors DVR's combined market cap, but a feat nonetheless.
Well, stellar. I mean, stellar also, but it is really true conviction. Hats off to the late Rakesh Jhunjhunwala when he, put his money where his mouth is. Aman, just to tell you, about 4.5 crore shares at that 130, 140 level when all was doom and gloom. And look where Tata Motor is. It's riding his way. So 1,000 rupees on the cards. I think the numbers will be very, very strong, and they are it is evident that their foray into EVs has played out very, very promisingly. I think if there is a placement here, it could even be debt-free in the next 2 years. So I am very, very optimistic. As a disclosure, Tata Motors is also in our portfolio, Awan. And I would again suggest another Tata stock, that is Tata Com. We have not seen anything from Tata Com yet. The delivery, the undersea cable, the type of volume and breadth they are seeing from the management talk. I think Tata Com is here to stay. This stock is another multi-bag in the sense this can easily scale up to 2,500 in the next 2 years.
That's quite interesting. Sanjiv, stay with us. Lots more to talk about, but I'm going to quickly welcome on board Boman Rustom Irani, CMD at Keystone Realtors, talk about how their quarter was. Boman, hi, morning. Your revenue and PAT have clearly improved. Still, margins have contracted from 6.4 to 1.6 on a year-on-year basis. Tell me what's adding to the pressure here.
So, Aman, thank you first of all having me on your show, and I'd like to state that we're very happy with the results of this quarter. Further, I'd like to state that the question that you put across to me is answered earlier as well, because we used to have a lot of legacy projects that we are completing now. And with this quarter and maybe early next quarter, we'll have finished most of the legacy projects. So you will see a big bump up, and all the earnings going forward will be as per our guidance, which is to be on a higher side.
If I look at on my left side of where I live in Mumbai, there is construction. If I look up, there is construction. If I look back, there is construction. I just want to understand that how the entire Mumbai landscape is going to change, given that there are a lot of infrastructures which now would be connecting the island city of Mumbai. I mean, it's no longer going to remain an island now.
Nikunj, I've said this before, and I'd like to repeat again, that if 3 lakh crores of infrastructure work which is happening in Mumbai city is to be kind of looked at, that's going to be a lot of development. And trust me, we'll all be thankful for this sometime in the future. There's the entire coastal road that is coming up. There are metros that are being laid, which will allow people to kind of smoothly, travel from work to home. There is the entire MTHL which has come up now. Development on either side will take place. Worli will get linked straight to the MTHL as well. So overall, when you see this kind of development, new areas are opening up, and developers, I mean, you can't blame developers for going where the infrastructure is. And this is only going to be growing for the next, I would say, 3 to 4 years. As a matter of fact, certain micro markets see a lot more activity than others. For instance, I can talk about Mahim, Matunga, Bandra, Khar, Santa Cruz, all the way up to Andheri. The western suburbs are absolutely on a fire. and people are getting, or the city is undergoing a rejuvenation where old buildings are being removed and newer buildings are coming in. These are more environmentally friendly, better designed, better poised to kind of utilize the area that is available right now. Families are growing. People are opting for more space in their homes itself than they did earlier.
So if I, let's say, ask a question on behalf of our viewers, and I asked this question to Niranjan Bhai 2 days ago when I met him. If one has to invest in Mumbai real estate, which part of Mumbai real estate should one invest in?
I think it's a smart question, Nikunj. The point is, I always tell people, invest wherever the infrastructure is growing and going. Invest depending on your need. But most importantly, if you're a family man, invest in an area where there's going to be, a great surrounding created by way of hospitality, by way of education, by way of, entertainment. Basically, nodes are being developed in and around Mumbai. But more important than all of this, Nikunj, I would state that, and I'm sure Niranjan Bhai has also said, invest in properties that you would be happy to utilize yourself, whether it is now or in the future. Invest with developers who've got credibility, who've gone ahead and have a past record. And finally, invest in the type of development. And like I said, there are all kinds of automobiles, there are all kinds of developers. You will always find your thread and your tribe somewhere. So you'd like to invest in those which resonate with what exactly your life is all about. I'd like to give an example. The developments that we do nowadays, we understand that the speed of transport is constantly reducing in the city of Mumbai. So whenever we get a gated community, we kind of build in every sort of amenity, whether it be a great gym, a great club, some restauranting space, entertainment space. Everything is being created within that complex. So at least on a weekend, you decide not to step out of the perimeter of your development, you can still have a perfect life. Except if it is you want to go and shop, otherwise you can use Amazon for that as well.
Okay, thank God we got that, squeezed that question in and got your take. But also I wanted to understand a little bit more about the recent acquisition that the company undertook, DB Realty subsidiary and the JV with Ajmera Realty. What kind of synergies are you expecting from these developments? What kind of visibility are they giving for your projects?
So let me start off with the one that we did with Ajmera. It was quite simply put, an opportunity that we kind of stepped into. Ajmera and I identified an opportunity where an earlier developer had kind of left an unfinished project, and there is the change of product that we are planning out there. I cannot say more about it because we're still working on it, and it's a project which we'll be able to turn around faster, and we'll be able to utilize our synergies and collaborate better. And I've always said that going forward is a time when collaboration will do a lot better than just competition, and when you have like-minded developers, you can do a lot more. Further, with regards to the DB1, it was a project that we were always doing. We just spotted an opportunity for a strategic takeover of the company, and with a financial arbitrage of about 400 crores. So it was an opportunity we could not miss, and that's how we've taken it over. It's a project that we've been developing since 2018, and one of the towers of Crown is completed, and we further have 2 more towers. One of them will get their OC immediately, immediately as in the next few months. And the last building will be completed by December of 2025. So we are working on that. Further, I'd like to also state that within the same area, we've identified opportunities, and we've announced that we've taken on projects. And one of them is in Pedder Road itself. Sorry, I'm saying Pedder Road, Prabhadevi itself, where we plan to kind of continue the success that we've had with Crown. We've also, just to add, acquired properties of about 5,000 crores the last quarter, and this quarter we've acquired another 1,800 to 2,000 crores worth of GDV properties, which makes our acquisitions this year more than double of what we had acquired in all of last year, and we still have 2 months to go. And we've got some very interesting propositions coming up.
All right, good to know. Thanks so much for joining in and giving us a heads up as to how things are shaping up for the company and, of course, the outlook for the sector as a whole. And in fact, staying with real estate, Nikunj, you had a pretty interesting conversation with Niranjan Hiranandani. Let's take a quick sneak peek.
So should one invest in Powai Township, Thane Township or the Panvel Township? If you want to live here, I think you would buy in Powai or Thani. And if you really want to look at it as a pure investment that you do and you want to double it in 2 years, 3 years time, I think Panvel would be a better bet. As far as the prices in Panvel, you will see pockets of affordable housing, mid-level housing, and there will be destinations.
When do we see you in Delhi? Tonight, today or tomorrow? So Mumbai, क्या बोल रहा हूँ? दिल्ली बोल रहा हूँ.
Tonight I'll be in Bombay. Tomorrow morning in your studio at 8 o'clock.
Okay, तो सर वो लिस्ट है छोला भटूरा, पनीर, सरसों का साग. व्हाट्सएप कर रहा हूँ आपको.
हाँ बिल्कुल निकुंज जी, जो आप कहोगे लाएंगे, जो आप कहोगे.
You know, whatever said and done, I've lived in Delhi for 15 years and nothing beats the winter food of Delhi. Trust me, I can say hands down. Kunal and Nuresh, next time we shall go to Bhasin Saab's restaurant. Trust me, the best Indian food if you get in the town, that is in Bhasin Saab's restaurant. कोई नई डिश ऐड करी जी?
हाँ, दही टिक्की बहुत बढ़िया बनाता है. It's not mine, it's my son's restaurant. और निकुंज, but the non-veg and the veg are very well mixed. I mean, people come from Dubai to eat his butter chicken. So it's so famous. I mean, some of the regulars who are there. But on the veg side, he's included couple of good things. So if you're most welcome with Kunal and Nuresh to join me. It'll be a pleasure.
नो कुणाल, हम थोड़े बेशर्म हो गए खाने के मामले. सेल्फ इनवाइट कर रहे हैं अपने आप को. सेल्फ इनवाइट ही कर लिया. चलो जी, कोई बात नहीं, नेक्स्ट टाइम पक्का जाएंगे. सो बसिन साहब, लुक फॉरवर्ड टू मीट यू टुमारो. But let's understand the real estate stocks. I remember distinctly a couple of weeks ago, you said the time to lock out of real estate stocks. Why is that?
No, I felt DLF and Godrej had reached some pinnacles. We have not fully exited. We have booked profits because we want to get into other spaces. And like you said, now the whole scenario is changing. I mean, where have you seen even mid caps or penny stocks go up 4 times? So we are invested. If you want, I can give you one tick, but I'll keep it for tomorrow morning, where I can give you one very, very good real estate name, which I think can double from here. So save it for 8 o'clock tomorrow morning. That will be my top pick on budget day. And I think there will be a lot of money being made by investors in this real estate stock.
Okay, you're keeping the suspense for sure. We will certainly quiz you about it come tomorrow. But let's also get in your thoughts then as to how you're reading into earnings from, let's say, a Voltas. Pretty muted in terms of the quarter gone by. They've missed profit estimates for 11 quarters. And then there was SRF as well. That pretty much on all counts was a bit of a miss. You're reading?
Yeah, so Avan, we are aware that Voltas had some issues in Middle East, which they are providing for. It still has a very good market share in the AC market. And, this is a season where North is going to be much, much low on the volume side. It's a quality stock, which is going to be the consumer arm for the Tatas. And I would expect maybe this quarterly miss to be priced, get priced in. So this has been a laggard on earnings, but we are looking at the future. We think electrical business is doing well, and sooner rather than later, once the provisioning of this Middle East is over, they should have a better chance over there. Now, on SRF, you're aware, specialty chemical is on the downside, but their nylon cord and the other businesses are doing extremely well. Yes, this quarter was weaker than we thought. But Avan, I think you have to look at SRF in the hemisphere of the China slowdown for environmental and specialty chemical. I think that is coming back because now China is being re-rated to be, coming back on the economy. There has been more money printed there. They want their industry to do well. So if you are looking for quality stocks, then SRF will fit your bill on this weakness of numbers to be a buying opportunity.
Okay, wanted to also get in your thoughts, Sanjiv, because it's been nothing short of a pretty stellar quarter by PB Fintech. How have you read into the numbers and what does this spell in terms of the road ahead for the stock?
So thumbs up, Avan. This has been my top pick on your channel for the last many months. And I told you, if you want to put your money, PB Fintech and Paytm on declines are biased. We have both of these in our portfolio. In fact, they are two of our top Fintech holdings. PB Fintech numbers have really been very, very pleasing. The management is very, very, very optimistic of the growth. And if I think in the fintech space, this is one space where you want to be, then today is a day, put your money where your mouth is. This is hitting 52-week highs. I can tell you a 30% upside in the next 6 months is very much on the card on PB Fintech. As a disclosure, this is in our portfolios and we have no intention of cutting down position. In fact, if we do get an opportunity, we will add this stock.
One of the top recommendations. Meantime, Kunal, I wanted to get in your thoughts. I was talking about how you have seen after 7 years Tata Motors pipping Maruti Suzuki, becoming the most valuable auto company. Just going by the fact that you have been tracking this counter for quite some time, what has been your outlook?
Well, I think it doesn't come as a surprise, frankly, because I would believe that it's one of the more consistent four-wheeler names which we've seen over the last many years for Tata Motors specifically. And from those COVID lows when the stock was, I think 64 or 70 odd rupees, I think from there on we've seen a completely different texture, different trend, different kind of a price pattern, technical structure for Tata Motors as compared to many of the other four-wheeler names. M&M in 2022-23, I think was getting into that groove where the stock moved from 750 to 1400, but somehow over the last many quarters, the stock has been a bit more volatile and sideways rather than being more trending. Tata Motors, on the other hand, has consistently been trending. Doesn't come as a surprise, as I said. And my expectation is that the stock should now, possibly in the next 12 to 18 months, cross above even the 4-digit mark as well.
Okay, confident of it crossing the 4-digit mark too soon. Pretty soon, that's what I meant. Okay, let's get in a view then, Sanjiv, as to how you've read into all that we've witnessed in Reliance Industries. The kind of volatility that we've seen in the stock price. You had the earnings reaction as well. It's, of course, multiple levers of growth. But what do you think are going to be some of the key drivers for Reliance Industries from a fundamental standpoint?
So, Avan, now that it reached the milestone of 20 lakh crore, there will be little volatility. And we know that HDFC Bank and Reliance have been the pillars of weightage as far as the indices go. 2 days back, you saw the biggest ever rally in Reliance. Yesterday, there was profit booking. But look at the unlocking. Look at ARPUs, which are growing. Look at retail, which is growing. The new energy business, which is doing well. The OTC business. At 3,000, I think it is getting fully priced. So we have to be watchful. We will wait for more disclosures. And the unlocking or the demerger of some of these business or the listing will be the key for that. But we still think that this is one power engine which you must buy on decline. It had its time in the sun in the sense of consolidation. If you are aware, 15-16 lakh is where we'd's at. It cannot be over there. And it has given a very, very sweet upside. But now I would be more incrementally positive on some of the banks, particularly large caps, which actually should do a catch-up.
Chakri Lokpriya also joining in. Sanjiv, good to have you. Thanks so much for taking time out. Chakri, hi, there's so much to talk about. Budget, Reliance Industries, PB Fintech, Tata Motors, overtaking Maruti. What would you like to start with?
Tata Motors is very well placed. It's, of course, a very inexpensive stock compared to, let's say, Maruti. And it also has a wider, canvas. It has both international, domestic, commercial, passenger, electric vehicles, regular vehicles. And, its stable is very strong, whether it's electric vehicles. And now the good news is the company's balance sheet is improving. It's coinciding with a time where the global will kind of start improving. So all these tailwinds will help the stock. And I think Tata Motors is very well placed at current levels.
What kind of swing impact do you think budget will have, Chakri?
Morning. I think 2 or 3 things, given that in budget, one is, of course, the continued thrust on capex. Second is rural. So if they increase the income, let's say farmer income from, let's say, 6 to 8,000. And the third is, of course, fiscal deficit. Now, capex is something which will help both domestic, urban, as well as rural. So when that happens, because infrastructure spending brings in construction workers, etc., and increases rural spend. So consumer discretionary, which has been kind of lagging, some of that, if we see, can kind of pick up. And on the other hand, the industrials and manufacturing, I think, will continue to do well.
Industrials and manufacturing will continue to do well. Okay, JP Morgan on Reliance. What we were talking yesterday, JP Morgan is simply documenting it. Slowly at first, then them all at once. It's like poetry, nice. Reliance Industries. JP Morgan feels that the 7% rally on Monday, which is day before yesterday, 29th of Jan, seems to have a little immediate driver, and it is more like a catch-up, which means it is a trading bounce or mean reversion, not a fundamental booster. Let's go to Samit, and he's going to take that report forward for our viewers. So Samit, they're pretty much saying what we were discussing yesterday. This is a rally driven on technical factors.
Well, yes, that's what the JP Morgan note is suggesting, that the 7% rally that we saw on Reliance Industries share prices on Monday is more to do as a catch-up trade, because given the fact that Reliance Industries did underperform the benchmark, that is Nifty 50 in 2023, so some kind of up move that we are seeing currently. They're also saying that going forward, they're not expecting large EPS cuts coming in for Reliance Industries, given that earnings momentum is picking up for the company, and they're also saying that going forward, they are expecting another 20% rally when it comes to Reliance Industries on the back of a telecom tariff hike that they're expecting, and the street is suggesting that this would happen most likely post the budget. Apart from that, the commodity margins are improving both on oil and chemical side, and lastly they're also saying that the retail valuation could re-rate going forward, which will lead to a re-rating when it comes to Reliance Industries. There was another interesting note that came in on ITC from Jefferies, and they're saying that unlike every other year where budget is one of the most important annual event from ITC's perspective, given the tobacco taxation, this time it won't be, given the fact that it's an interim budget and the final budget would come in July 2024, but they're also saying that the stock would continue to remain range bound until the final budget comes out, and they're also saying that there's also a major overhang on the share prices of ITC, and that is the largest shareholder BAT, which is looking to sell its 29% stake in the market because of the debt concern. So this will be an overhang on the share prices, but on valuation perspective, they're still saying that ITC's valuations are reasonable, just that there are some near-term overhangs, firstly on the budget, and the second is the stake sale coming in from British American Tobacco Company.
The street is going to read into L&T's numbers. While for the quarter gone by, they've fallen short of market expectations, but the guidance is very strong, both on the revenue as well as the order inflow front. Chakri, the question was for you on L&T.
Sorry. Yeah, got it. Yeah, indeed. I think you rightly pointed out, because the order guidance rather is strong. I think that's where the stock will react to. The stock L&T is very well positioned for the continued industrial manufacturing spend and continue to benefit from all that spend. So I think the order book is the clear metric. The revenue has kind of grown, it's 14-15%, slight margin miss, but valuations are largely okay. But at this point in the cycle, I think order book is the key. And I think L&T continues to do very well, even from at the current levels, and it should be a good 20-25% up in a few months' time.
See that on the charts, although yesterday it fell 2%.
I think it's a very consistent kind of a stock. We were doing this study over the last many years that L&T has a very high degree of correlation, more stable degree of correlation with respect to the benchmark Nifty. So whenever we've seen historically, say with a stretch of 6 months to 12 months that L&T has performed well, we've seen Nifty also to get in tandem in terms of the price trajectory as well as the price movement for itself. So that adds to the positivity for the stock price. On the trend specifically for L&T, I would still believe that the stock has this habit of getting into a lot more sideways zones. So for 3 months, 6 months, the stock remains sideways, and all of a sudden you see the stock breaking out and then climbing up another 10 to 15%. So on a CAGR basis, say over the last 5-6 years, we've seen almost 15% to 20% odd as a possibility or a potential upside for L&T on a 6 to 12 month basis.
Okay, meantime, let's also get in your take then, Chakri, as to how you read into Dr. Reddy's solid beat for the quarter gone by. What does this spell ahead, and how does it stack up in terms of your pecking order within large cap pharma?
Dr. Reddy has done well. It's shown an improvement both domestically, outside India as well. The revenue is kind of showing that in terms of reflecting the underlying demand for the products. The margins are kind of stabilized. I think maybe there'll be a small uptick in the coming quarters. But given all this has kind of been reflected in its valuation. It's kind of right up there. So I think the stock kind of does in line with the market and not an outperformance at the current levels.
Coming in on DRL, just looking at what the market texture was yesterday, and clearly it was Bajaj Finance which was a big drag down. And Chakri, I guess it was not so much about the earnings for Bajaj Finance, but the hint of a top-level management change which, corrected the stock.
You're absolutely right. One was a potential management change. And the second is the valuation itself. So when the valuation is right up there, amongst all the NBFCs, it's trading at a high level comparatively to the other ones. And so any hint of change, management change, will kind of, or any such news. So I think from that perspective, I think Bajaj, so therefore it will reflect until there's greater clarity.
Bajaj Finance and Trade. And Kunal, given how sharp the fall in Bajaj Finance was yesterday, do you see any follow-through sell-off coming in today too?
I do. So maybe not immediate, Aisha, but I think over the next few weeks, I would actually expect the stock to consistently show signs of weakness. In fact, what's actually happened and changed dramatically for Bajaj Finance is that the stock has been, in the last 1 week, has been trading below the 200 moving average. And we've seen, multiple times that when a stock trades below its long-term moving averages, the trends for the stock are far more fragile. We see the stock getting into sudden bouts of volatility, sharp phases of correction, which comes across on the back of higher volumes. And I don't, in fact, I see yesterday's price action more or less in sync with how the price trends have been behaving over the last few weeks for Bajaj Finance. So I would believe that till the time the stock trades below the 200 moving average, one has to be a lot more cautious over here rather than taking these as buying opportunities and use these as corrective phases to try and add more. I think one has to start becoming a bit more cautious and buy only once the stock confirms a breakout back again above the 200 DMA.
Why are FI selling? I mean, if the India appeal is so strong, they were net sellers last year, they're net sellers in the month of Jan. Why is that?
I think it's partly because of the rupee is still not kind of stabilized, and when looking at the dollar returns, India is still kind of, and that is one of the reasons of FII selling. Second is I think going forward as the interest rate turns in the US, once they start cutting the rates, at that point the attractiveness of India and other emerging markets also improve. I think that's the cycle that we need to wait for. We'll know it on Wednesday, at least a hint of the direction that the Fed is going.
About 24 hours from now, actually the budget market would be in full budget group, so to speak. The finance minister is expected to reach the parliament at about 10:40. She's likely to present the budget on the floor of the parliament at 11 o'clock sharp. And, what a extraordinary, 5 years it's been for Nirmala Sitharaman, both in terms of positioning of the economy, size of the economy, market cap of the stock market, participation by the retail investors, the balance sheet of the government, the excitement at corporate level, and the kind of growth what we've seen in sheer wealth. So 5 years is not once upon a time, but in 5 years, India is looking like a very different place. It's dominated by retail investors. Tax regime is very stable. We are looking at earnings growth of about 15% on that kind of a large base of 4 trillion. I mean, that's extraordinary. FIs have sold continuously last 1 year, but that in a sense has not really moved the market mood, so to speak. Defense stocks all-time high, railway stocks all-time high, PSU banks are making a comeback, new sectors are getting created. So the entire wealth effect, if I may say so, is really having a flywheel effect pretty much across the board now. And that, I think, if you ask me, is the biggest hurrah, at least for the Aam Aadmi. This bull market belongs to the common man. And that famous picture which I always refer to outside BSE, the bull with the common man right outside the stock exchange, Bombay Stock Exchange. We put the archive picture, we'll take it out some point in time. But I think for me, that is really the bull market and what it really represents. 9 o'clock pre-open session, Nifty is down 2.5%. No, it'll change. I can promise you this will change, right, Kunal? There is no way it will be around 2.5%.
Yeah, these are pre-market.
Somebody is just pressing some random buttons here and there. This one will change. I can give you a Bhavishya here that 2.5% niche nahi hoga. 0.5%, okay, that's manageable because global cues also are looking slightly subdued. So Chakri, before we allow you to escape, literally in this case, what's been your last recent purchase? Where have you added more stocks? Where are you shopping and where are you taking some chips off the table?
Where we're adding is, of course, in the auto ancillary space. JK Tyre still is an inexpensive stock. It has repaired its balance sheet. The earnings growth is very visible. The top line is growing. The raw material moderation. Valuations are probably about 9-10 times. And in the coming cycle, it will benefit. So that is one in the mid cap space. In the large cap space, Tata Motors, I think, will continue to do well for the reasons we just discussed. And we kind of completely stayed away from consumer discretionary and as well as, from some of the banks, frontline banks. We continue to maintain that stance because we think some of the NBFCs like Power Finance, REC will continue to do well because both valuations as well as outlook is on their side.
Okay, Chakri, good to have you on the show as always. We'll let you go on that note. Let's also get in some mid-cap trading ideas as well as we're counting down to the market open. The pre-open rates, of course, are indicating a bit of a red start for us. Kunal, but what's on your mid-cap list?
Well, that's a buy on Manappuram. The stock yesterday managed to cross about the 180 plus mark. And now my expectation is that with this momentum continuing for Manappuram, the stock can now head towards 190, 192 levels over the near term. So that's a target over the very short term for the stock, and stop loss could be kept at 178.
Right. And Naresh, what's on your mid-cap radar?
So that would be a buy on Bosch Limited with a stop loss at 23,000 and a target price of 26,500. The stock has silently and slowly and steadily moved up after breaking above that 21,000 mark, taking enough pauses. We recently took a pause around 23,500. Dipped back to 22,500 odd levels and now broken out above that. Good volumes also. So expecting this trend to continue in the stock and go back to the highs which it made last in 2017 odd levels.
Right. Okay, let's move on and let's tell you what else is happening outside the world of equity markets. And the deadline to update the FASTag KYC is going to expire today. NHAI has urged people to update their details by the end of the day. Meanwhile, banks are set to deactivate all of blacklisted FASTags with incomplete KYC details post the deadline. Also, shipping giant UPS plans to lay off 12,000 employees, and the move will save them around $1 billion in cost. The move comes after it posted a weak set of earnings. Meanwhile, PayPal is also mulling to cut around 2,500 jobs to right-size the business. And a US judge annulled Elon Musk's $56 billion pay package from Tesla, citing that the amount was unfathomable and unfair to the shareholders. The pay deal was the highest in America's corporate history. Following the ruling, Tesla's shares also slid about 3%. And back home, dense fog continues to grip the national capital as well as parts of northern India. Over 150 flight operations continue to be hit at Delhi airport. Meanwhile, several trains are also running late. Remember, this is the coldest January for Delhi in the last 11 years. Now let's move on now. It's that time of on the show when we get you all the buzz around what to expect from the budget tomorrow. And the interim budget, it seems, may give some relief to income taxpayers. In fact, ET now has learned from sources that Finance Ministry is discussing various proposals to maintain a balance between relief and revenue. So let's take it across to my colleague Prakash Priyadarshini and find out what he's picking up from his sources.
Yes, an important development coming in as we are learning from our sources that the government is likely to provide some relief to the taxpayers in the interim budget. We are given to understand that relief could be given in direct taxes under new tax regime in order to make it more attractive. Sources are saying that tax exemption limit likely to be increased to rupees 3.5 to 4 lakh. Along with that, when it comes to the overall tax rebate, that could be increased to rupees 7.5 lakh under a new tax regime. Going ahead, sources are also saying that the process could be simplified further under new tax regime to attract, to encourage more taxpayers to adopt a new tax regime going forward. Since we are in election year, so expectation is high, and This government is also going to present its last budget before going into parliamentary election. Similar kind of decision had been taken in the year 2019 when this government had presented interim budget. So a similar kind of expectation this time as well. And we can simply expect that the government may take some kind of decision when it comes to direct taxes in this budget as well.
The government is also likely to hike insurance cover under Ayushman Bharat scheme. ED now has learned from sources that the health insurance cover under the scheme will be hiked from 5 lakh rupees to 10 lakh rupees. My colleague Anurag has more details.
Insurance-related announcements are expected in upcoming union budget, and as per our sources, scope and coverage of Ayushman Bharat health insurance scheme is likely to be increased. Presently, Ayushman Bharat health insurance scheme provide some insurance coverage of 5 lakh rupees to around 10 crore BPL families, but in upcoming budget this limit will be increased, and as per our sources this limit will be at least 10 lakh rupees. And the scope of coverage will also increase. Presently, it is limited to the BPL families only, 10 crore BPL families. But this will, government is likely to enhance the coverage of this scheme to the MSME workers, gig workers, workers of unorganized sector, senior citizens also. Apart from that, a dedicated standard health insurance policy also can be announced in the budget. For this, the regulators is in talks with insurance companies, and private hospitals has also agreed to give dedicated packages for the treatment related to the Ayushman Bharat. So in upcoming budget, likely there is a likelihood for announcement related to the Ayushman Bharat scheme, in which the coverage will increase and scope will also increase.
Right, okay, that's all the buzz that we're picking up on the budget. Come tomorrow, where you can catch all the action right here on ET Now. But PB Fintech, that should be reacting to its earnings which came by. That stock surely has gapped up about 5.5%. In fact, here's Nikunj's take on the same.
They've reached a profit at least 2 quarters ahead of what, in a sense, everybody was anticipating, and they managed to beat their own guidance. Now, that's what markets like. That look, the path to profitability, what they carved out, they're reaching it faster. And if they're reaching it faster, it could be a function of cost cut, new launches, or growth in the business. The growth in the business is at that base, they're enjoying a certain amount of monopoly and certain amount of advantage. Cost cutting, I think, has been great, and like you said, the ESOP charges actually have been taken care of. But it's not at 500. A year ago, PB Fintech was available at 500. Now it's at 900. At 900, markets knew that they were reaching towards this path of profitability. The surprise factor is that they've reached the path of profitability much faster than what anybody anticipated. So what will happen is that the price targets now would be pulled forward, which means whatever your price targets for terminal values for FY27 were, they actually would be now end for FY27. So based on these numbers, I think there is case for PB Fintech now to start moving into long-term portfolio stocks because they've demonstrated turnaround. In the near term, the stock is up 125% from last 1 year. And you know that there's an anchor supply and there is a supply which comes from the ESOP owners regularly. So once the demand supply settles down for PB Fintech, I guess it has still scope to outperform. My limited point is that it has been a massive outperformer, and looking at these numbers, you can say that the outperformance is really here to stay, because that's what you have to judge now, that easy money is being made. Now will it outperform the Nifty or will it underperform the Nifty? On that yardstick, I think it will outperform the Nifty. Like I'm very clear, Paytm will underperform the Nifty. Zomato will outperform the Nifty. PB Fintech, I think, will outperform the Nifty.
Okay, that's the take coming in on PB Fintech. Lots of other stocks as well which should be reacting to their numbers. I want to see what DRL is up to, considering it was a Q3 beat. The North America business has scaled up by about almost 5% on a sequential basis. The DRL is seeing much of a tempered move. What's L&T up to? While the Q3 margins were a miss, the outlook is very strong. L&T, but still cracking down by about 3%. Let's see what the normal trading actually kickstarts for L&T. What is SRF up to? There too, you've seen a margin decline come by in the chemicals as well as the PFB business. SRF as well starts off a little bit tempered. And then TCS, which has signed that 15-year deal with Aviva UK, That should be another stock in focus. Very tempered move coming in there, as is the case for, I guess, the indexes as well. Pretty quiet in trade so far, at least. But let's quickly tell you what the index strategies are coming in from our experts as well. What's Kunal as well as Naresh's stance when it comes to the Nifty as well as the Nifty Bank. Kunal is recommending buying Nifty this morning and Naresh is recommending a hold at best. What about the Nifty Bank? Pretty much a consensus there as well. Kunal recommends a buy and it's a hold coming in from Naresh.
All right, just a couple of minutes to go and we'll be opening for trade a day prior to the budget. And Kunal, let's get in your thoughts then as to how you're reading into some of the frontline IT names.
Well, so far over the last 1 or 2 weeks, the stocks have gone a bit more sideways. Like for example, Infosys, I think, has been taking resistance around the 1700 mark. I think yesterday also there was an attempt towards 16, 1880 mark for Infosys, but the stock failed to cross over those levels and then has come back towards 1650 odd mark. Even the same was the case with TCS. The stock has been unable to surpass clearly above the 4000 levels, and it's been taking resistance at 3850, 3900 odd mark for TCS, and same is the case with Wipro. Now my expectation is that for the next few weeks these stocks may be a bit more sideways, but in case if these stocks come back to their short-term swing lows, for example, if Infosys comes closer to 1600 levels, TCS around 3700, 3750 mark, and Wipro may be closer to 455 odd levels, I think these are classical entry points for someone who has a time frame of 3 months to 6 months or more than that, because my sense is that these large cap IT names are showing strong signs of a trend reversal for themselves. Maybe on the short-term charts, these stocks are a lot more sideways, but on the medium-term charts, the indications are a lot more bullish for many of these stocks.
Okay, fair enough. Meantime, Naresh, how are you looking at the charts of Reliance Industries?
So Reliance Industries looks promising in the sense that it was a clean breakout day before. It was a 7-8% move. A retest of the same price point where it broke out comes closer to this 2790 to 2750 mark. So that's the zone you want to re-enter. Keep a stop loss below 2700 and expect a move again towards a new all-time high. So the dip today should be a buying opportunity, is my view on Reliance Industries.
Okay, just counting down then to the market open. Just 50 seconds to go before we hit the opening bell for the day before the interim budget. Let's see what kind of trades we actually go in for, because just the market positioning has really been all over the place, given that big spurt led by RIL and the other blue chips day before, and yesterday that drag led by RIL and Bajaj Finance and the likes. Today, of course, you'll have an earnings reaction coming in from DRL, from L&T. Both those stocks, as I see on my screen, are not doing anything. They're in fact in the red as we speak right now. You are, of course, seeing once again better traction when it comes to the broader end of the market. Irrespective of what the Nifty and the Sensex did in trade yesterday, you had the small cap index hit a fresh record high, because that's where really all the growth companies and the valuation comfort, it seems, still very much is. The first rates then on your screens right now, and it's a very, very tempered start. Let's see what direction the markets take from here on. Let's start off with the earnings reactions. First on L&T, because that's going to have a bearing on the index as well, given its weightage. L&T starts off 3.25% lower right now in trade. Although while the numbers were a miss, they have raised their FY24 order inflow guidance all the way up to 20%. But no, the market is not reading into that 4% of a dip coming in for L&T. DRL as well. The Q3 numbers were a beat led by the US sales. The India business is an uptick of about 5%. Very tempered a move coming in for DRL right now. SRF, Voltas, all have been disappointing numbers, so look out for that as well. I want to see what Star Health is up to because they too came out with their numbers, as was the case with PB Fintech, wherein the core business revenues have come in higher by 40%. The contribution of the margins has been up by 400 basis points. There's TCS as well, which has signed that 15-year deal with Aviva. Reports are saying that the deal size is a mammoth $2.5 billion, 0.5% higher for TCS as we speak. Where's the pinpoint? Reliance Industries. Let's see what that stock is up to. Holding up in the green of about almost 1% as I see it right now. But I think it's a bit of a tug of war with L&T on one end and Reliance on the other. Reliance really not being able to do all that heavy lifting, even though the stock is still holding up 1% in the green as we speak right now. The government has cut the import duty on mobile phone parts. Dixon Technologies is the stock that we should bring up for you on your screens because that's going to have an immediate bearing. Or for that matter, I think Reddington as well eventually. But yeah, the more near-term impact is going to be felt by Dixon. That stock is holding up as we speak right now. But that's pretty much it. Where else are you seeing any varied reaction, if at all? Voltas, they've reported a loss led by projects business, so look out for that as well. Let's see what SRF also is doing. The margins have declined in the chemicals as well as the PFB business both. So that's going to be another stock which is going to be in focus. There's of course Cochin Shipyard, which also came out with its numbers, and given the tilt of the market, which has been so skewed towards the defense names, 5.5% of a gap up coming in on Cochin Shipyard, and I don't think that stock is going to abate anytime. The margins came in at 29% versus a comparable of 23%, and the revenues also have seen a mammoth uptick of 64.5%. So for all those naysayers who thought that these pockets have run up ahead of the fundamentals, clearly not, because the growth numbers seem to be justifying that kind of a parabolic move. But